income statement line was restatement of 15 billion negatives. There is a gain of 22 billion and negative impact in the P&L line items of 15 billion. That is what is leading to a 7.4 billion gain in hyperinflation impact in FY24. And although we are seeing inflation coming down in Ethiopia, but consumer price index continues to be growing. And that's why we needed to apply our IAS 29, and that's what has led to the impact of 7.4 billion. Our group net income, excluding minority interest, Peter mentioned about it, grew by 1.2% year-on-year to Kenya shilling 63 billion. And I want to highlight about this. This is a reflection of startup losses we are still investment phase, startup losses from Ethiopia, and the momentum that I spoke about for Kenya. In terms of CapEx, this is what drives our engine. This is what has helped us to build 2,800 base stations in Ethiopia. Overall group CapEx, we closed at 93.5 billion. Within that, split is almost 50-50 between Ethiopia and Kenya. As you can see, the blue section in the pie chart, the majority of the investment is coming for radio access network, even for Kenya, but almost 2/3 of that is coming for Ethiopia. So this is what has supported our rollout and also improving our customer experience and additional rollouts in our 5G, which we have closed now 906 sites as on end of our financial year. Looking at overall performance for the group, once again, I want to reiterate, outstanding performance in Kenya with impressive double-digit growth across from top line to bottom line. Ethiopia, first full year of operations, supporting top line, growing from Kenya's 11.7% to group of 13.4%. So it's an uplift from 11.7 to 13.4, which is what Ethiopia is going to do in future. And the numbers also reflects on constant currency without translation loss. If I remove the translation loss, EBITDA actually grew for the group 19.2%. EBIT almost flat, and group net income, excluding minority interest, growing by 4.2% year-on-year, versus the reported growth which we spoke about, Peter mentioned about 1.2%, which is very encouraging. So I want to highlight here is something that is very important for you to take away. We believe the worst is behind us from a group financial point of view. Although you have seen Kenya's performance is extraordinary, but when you report our group numbers, of course we have seen some headwinds, has some tailwinds in the last 2 years. But I want to confirm that worst is behind us. So when you see the group income or group numbers, you have to see Kenya separately and Ethiopia, because Ethiopia is in investment phase and such a big greenfield with large investments is expected to have losses. And we believe whatever losses Ethiopia had is within our expectation. So as the business gains scale, Ethiopia will have positive impact to our group performance in the coming years.
We continue to have a strong and broad-based Kenya business, as evidenced by the results. We are encouraged by the commercial progress in Ethiopia, which will start being a significant contributor of growth, both to the group, both at a top-line level, but also an accelerator at the bottom line, given this is the highest peak cost here. We continue being a tech partner of choice for digitizing Kenya. The local device assembly, which we launched in the previous financial year, continues to accelerate the smartphone penetration, which is critical for us to make sure that everyone gets onto the internet and no one is left behind. We have seen real value from our investment in technologies, and we want to be a tech core, such as big data and analytics, delivering greater value to our customers. For Kenya, we expect to maintain the service revenue growth momentum, with M-Pesa and fixed revenue expected to grow at double digit. Our GSM, which is our connectivity business, should grow in high single digit, which is a significant step up from the previous low single digit. Our EBITDA should remain stable, including a stable CapEx intensity, which is CapEx a percentage over the period. Ethiopia is still within expectation, and you heard the CFO talking about it with respect to the medium term, both in terms of expectation, but also in terms of funding and investment. Ethiopia earning before interest, tax and depreciation. Ethiopia earning before interest, tax, depreciation and amortization, this is a finance tab, is expected to break even, and this is important, within year 4 of its operation, as we have guided before. We expect to have 15 to 20 million customers with a network of just over 4,000 sites in the medium term in Ethiopia. So by the end of this financial year, we want to offer our customers a seamless digital-first experience. In fact, I should say a seamless, always secure, always on. And some experts are smiling at me in front here. Always secure, always on, worry-free. Yeah, worry-free, seamless digital-first experience. We want to unlock more value through segmentation, and the worry-free piece, you'll hear another announcement coming in the next month or so, especially on an M-Pesa business. So we want to unlock more value through segmentation, which we have started the journey in financial year 2024. We'll invest in more tech capabilities, in particular within our organization, so that we don't leave any employee behind, and we are calling it 2+1. We'll scale the fixed business, which we need to accelerate to connect more homes and more businesses, so that everyone has broadband connectivity in addition to mobile. We will keep the momentum for the Ethiopia's commercial execution that you have seen. And we have a CEO of Ethiopia, and when we go to Q&A, we'll be able to answer more questions there. So let's now, that is in terms of focus on financial year 25, but also the medium-term outlook. Let me now turn on to the guidance, which is for investors for financial year 2025. So based on our performance and on the focus areas for the year, our financial year 2025 guidance is as follows. For Kenya, earning before interest and tax will range between 149 billion to 152 billion Kenya shillings. For Ethiopia, the EBIT loss will be in the range of 46 to 43 billion. This brings the group EBIT guidance to a range of 103 to 109 billion, which is a significant growth if you compare it to financial year 24. On CapEx, Kenya CapEx guidance is within the range of 52 to 55 billion, which is an increase of the current year as we continue to invest for growth in future. For Ethiopia, recognizing that we have had an accelerated CapEx investment in the past 2 to 3 years, our CapEx guidance will range between 21 billion to 24 billion, which is still a very significant increase as we target to get to 3,500 sites by the end of the year. So the group guidance, the group CapEx guidance, therefore is the range of 73 to 79 billion Kenya shillings equivalent. Additionally, for Ethiopia, we guide more because it's a startup business. We'll continue to acquire or drive acquisition of customers. We are targeting to grow our 90-day GSM, which is our connectivity customers, to between 7 and 10 million customers, and M-Pesa 90-day active customers at a range of 2.5 to 4 million customers.